Hi everybody, this is Keshav from MakeyouBillionaire Trade Secrets. Today we are going to see a very powerful value investing method, and this is one of the very secret strategy that many billionaires or value investors use this for their investing purposes. Okay, so let us go into analyze these details more in depth. So if you're watching first time into my YouTube channel, I request you to subscribe my YouTube channel so that you will get more educational videos about value investing and other details. So you might be heard this like two lines in various social media account saying that if you invested in Infosys in 1980, it is worth crores and crores of rupees right now. Or you might be heard that if you had invested in Maruti in 1980 or 1990, you can buy a Jaguar or Lamborghini or something else. It is worth more and more crores right now. Okay, so a lot of stories are coming in day to day in social media accounts. You might be read, I am reading everywhere reading, but how it is getting generated? Because for investing, people are not at all looking for the company it is good or bad. Definitely while investing, people will definitely know, okay, it is a worth investing in the company, what are the future products or what are their raw materials or what is a growth perspective. There are lots and lots of thinkings are there for a value investor for investing in those. And one of the parameter of the value investor is that whether the company is paying regularly dividends to their shareholders. Or in other words, if a company is paying regularly dividends to the company, we can say it is a good company, it is sharing their profits to their shareholders. It is one of the criteria for selecting the value investors. Now, before we entering into the secrets about the dividends and dividend yield, I just want to tell you what is a dividend or what is a dividend yield for the investors. Okay, those who doesn't know, you can just understand it. Dividend means a reward, a cash or a stock that a company is giving to the shareholders every year. Okay, it is issued in various forms. So the company's dividend is decided by the board of directors and it requires the shareholders approval too. Usually, dividend is usually a part of the profit, as I told you earlier, the company is sharing with the shareholders. And now I want to add one more terminology called dividend yield. What is dividend yield means? Usually, it is just a ratio. Okay, it is just a ratio. Or somebody will say like dividend per price ratio of a share is dividend per share, whatever the company has decided, divided by the price of the share or that particular moment. That is called dividend yield. Okay, we will see one simple example so that you will understand more better. So if you see a simple example, for example, a company or a stock is trading at 100 rupees. The company announces a dividend of rupees 10 rupees for the shares, for the current shares. So the dividend yield means rupees 10 dividend divided by the price of the stocks, which is equal to dividend yield, which is nothing but the 10%. That is the dividend yield. Okay, so this is the 10% the returns on the investment you are holding for that particular stock and the company is giving to you. Okay, hope you understand this one very clearly. Now let us understand more about the investing style perspective. Okay, so you might be heard that a lot of value investing methods, a lot of PE ratio, PB ratio, a lot of things you might be heard, right? So you have to identify the timings when you have to invest in this particular dividend based companies for holding period so that you will get more profits. Okay, so there are a lot of examples I want to tell you when you have to invest in this particular stocks. You just think for a case one, the stock is trading at 100 rupees. Okay, the company has announced a 10 rupees dividend on the 100 rupees share, which means that if you invested like a 10,000 rupees capital, you will get 1,000 rupees dividend per year for based on the 10 rupees dividend if they earn. Suppose you think actually because of corona or because of some economic issue or some other economic slowdown or some other profit booking something, the stock has reduced to 10%. The stock is trading at 90 rupees. Now as per the dividend the company has given 10 rupees. Okay, if you divide it by the price of the stock, it is like 11%. which means that if you had invested 10,000 rupees, every year you are going to get like a 1,111 rupees you are going to get as a dividend. Okay, let us take another example. Suppose I think actually a big some kind of a India-China dispute, a border dispute, or some other issue actually, every stock is crashing like 10 to 12% is getting down, and you see some kind of a dividend-based company, it is also getting down 10 to 15 percentage, and if you look into that, if you see the dividend yield for the company, 10 rupees by rupees 80, which is equal to 12.5% dividend yield, which means that every year if you invested 10,000 rupees as per the latest dividend records, company will give you 1,250 rupees dividend per year. Let me take a worst case like a COVID cases or that type of cases, the company is continuously going down. Okay, 70 rupees is a crash share. And if you see as per the dividend of 10 rupees divided by the price of the share, it is equivalent to close to like a 14.28 percentage, which means 10,000 rupees if you invested in this stock during this particular time, you are going to get 1,428 rupees in dividends. Okay, so dividends other than the profit share actually, you are going to get like a 1,428. That means 14 percentage you are getting a dividend. You understand this concept very important, right? So it matters while you're investing into this value based thing, you have to identify, as I told you, first you have to identify a dividend based company. In that dividend based company actually what is the share price. You should never invest in that current prices, because you know actually always, as I told you in many other videos also, every year you will get 4 or 5 times opportunity you will get it investing. Okay, so during those 4 or 5 times you have to see a very good quality a dividend based company. If that particular share price of that company is reduced by 15 percentage or 10 20 percentage, if it is reduced, you slowly pump your money into that. Okay, this is purely for holding investors, I'm saying. This is not for trading. Okay, this is not at all for trading. This is purely for the investors. I repeat actually, as my previously many videos I told you actually, every year you will get 4 or 5 times you will get this opportunity. Okay, during this opportunity, good dividend based companies, if you identify and the price is like a bill at 20 percentage or like a 15 percent, if it is getting reduced, you slowly put your money on that. Okay, so other than the stock price profit, you will get a very good dividends also, you will get it from that particular stock prices. I think hope you understand this max and this information very carefully. Okay, so now I told you the price is decreasing, so you got the dividend. Now think about a case actually where the price is constantly going up and up. For example, 100 rupees, now the price is like a 110 120, something higher price is going on, which means that you are eligible for less and less dividend. Okay, so as a value investor, you should never buy a stock whenever the price is shooting up. Okay, I repeat, as a value investor, you should never invest into the prices are going up and up and up. Actually, you should never ever invest, because you will definitely get less dividend also. Market will definitely come for volatility. Okay, 90% or 95% of the investors or retail people doing the mistakes. Stock is moving up and up, actually they will slowly put the money there and they will be getting a trap. Definitely that stock price will come down. Even though you won't get a profit also, you won't get big dividend also, you won't get it. So you have to wait for an year. You will get 3 or 4 times an opportunity to invest whenever the price is coming down. You identify that stock is giving a good dividend also last 4 or 5 years. So invest during those time and you are into a big jackpot. Okay. So simply for my third viewpoint of dividend is that whenever the share price goes down, the yield goes up. It means you are in a good profit in a undervalued. We can say it is undervalued if other parameters also matching. In other words, if the share price goes up and up, actually the yield goes down and it is overvalued, because you won't get a dividend also. Definitely market is going to come for a correction. As per my analysis, every year 4 or 5 times the stock prices will come down and you brought in an upper layer, you will be net trapped. Okay, so you understand this rule very carefully. Now, if the share price goes down as a totally 10 to 15% due to any reason, and fundamentals are also good. Okay, for example, I can tell you a simple example. Maybe I think 6 months back or 1 year back, I heard that Infosys CEO is quitting due to some reasons, and the stock price was went down to 7% or 8% went down. Okay, because if a CEO is going down or no CEO is going to come or due to some internal issues, their fundamentals are okay. It means actually they have a very good company. Okay, during those times actually, if you have a investors, you should look for an opportunity for investing those companies, because CEO coming and going is not at all affecting the company's values at all. Okay, you understand my perspective what I'm telling. So during this time we can say it is like undervalued. Okay, and you can slowly pump your money into those particular stocks for a holding perspective, not for trading. It is purely for holding perspective. You will get your good money back very soon. And the rules for the undervalued and overvalued, if you are using any screeners, for example fundamental screeners, there are a lot of sites are there for screening, understanding what are undervalued stocks are currently available or overvalued are there. I will give you some examples in this video about this undervalued overvalued, but just for your information, this is a golden formula for you. What you have to do is that you have to check current dividend yield if it is greater than the average dividend yield for the last 5 years. You take last 5 years, okay, and current dividend yield, if it is greater than that, the stock is undervalued. You can consider that for investing. Or in other words, if the current dividend yield is less than the average dividend yield for the last 5 years, the stock is overvalued. Okay, this is the very golden rules. Actually, you have to keep this one in your mind, or whenever you are using any kind of a screeners, fundamental screeners, you apply this rule, you will get all the stocks actually which are there in undervalued or overvalued. Okay, and also I want to tell you very important information. While calculating this one, you should never use technicals. I repeat, you should never use technicals, because the technicals will always comes into the picture. The technicals or price actions or whatever indicators you are using, actually you should never use it if you are using by investing, by value investing by this method. Because whenever you see any kind of a value investing through the dividends or dividend yield which I discussed right now, on that time the technicals will never match anything. Okay, it will be like 52-week low, or it will be like a multi-year low, or that is the status situation of that particular stocks. Okay, but what I want to repeatedly tell you is actually you have to always check other value investing details or ratio also before you reach into a investment decision. Okay, this is what my personal perspective. Don't jump into, for example, a stock is continuously going down and down and down, actually okay, you are just thinking actually okay, this video told actually current dividend is greater than average dividend yield, let me go and invest into that. No, that is not the right decision. Okay, so you have to, this is one of the major parameter I am saying, this is one of the major parameter. Plus you have to see some other ratio also, which I am going to share in upcoming videos for the value investing. So only four things only you have to consider total. If you consider total 4 ratios, you can clearly identify what are the undervalued stocks are there, or future multi-bagger stocks are there, which can get a very good returns also, plus very good returns in the form of dividend also you can get it. Okay, so I request to everybody, please subscribe my YouTube channel so that you will get more upcoming value investing videos, so that is very good for your investing details. So just remember this undervalued and overvalued for the value investing for the dividend point of view. Okay, I am going to give you some examples to you. You can quickly understand what is overvalued or undervalued. Wipro, I just see current dividend yield is like 0.59. When I look for average dividend yield for last 5 years, it is 0.78. So our rule says that if current dividend is less than the average dividend yield for the last 5 years, the stock is overvalued. So this is overvalued. Wipro is a overvalued right now, or based on the today's price or yesterday's closing price of the Wipro, I am saying Wipro is overvalued. Let us take in case of another example of ITC. ITC current dividend yield is like 6.15. Okay, when I see average dividend yield for the last 5 years, it is 2.14. So if you look into this, the current dividend yield is greater than the average dividend yield, which means that the stock is undervalued. I can say ITC is a undervalued right now, or based on yesterday's closing price, ITC is a undervalued. You can consider for investing. Okay, don't invest. Investing means not like a 1 day 2 days kind of a thing. This is think about in a very long term perspective. And I see one more case of Tata Consumer. Okay, Tata Consumer current dividend yield is like 0.57, and when I look into average dividend yield for the last 5 years is 1.19, which is overvalued right now. Okay, so this is the golden rule. Keep this in mind, or when you're doing any kind of a screener or anything, you just apply it so that you will get to know whether it is undervalued or an overvalued. Okay, I think clearly everybody has got the information. So important information I want to tell you that the current dividend yield will change the stock prices changes. Okay, so whatever these details I told you, this is based on yesterday's closing price. Today is Saturday, so Friday's closing price stock, based on that I took this information. Okay, so the dividend yield will change. If the stock prices changes, the dividend yield will changes. So look always the current dividend yield before you invest. Whenever you're investing, actually just take 1 day before, actually just see actually what is the ratio. Is this very small means actually you cannot compare, but it is a very big one, you can always consider for the investor. Okay, so I used to share a lot of value based investing stocks using my Telegram channel freely to all the customers. So if you subscribe into my Telegram channel or into my YouTube channel, you will get a lot of information about the stocks, about the investing method. Okay, and now finally actually get your facts with straight 5 W's. 5 W means I usually analyze before investing into any stock. I used to analyze which stocks I have to analyze, or what stocks I have to analyze, and where is their values currently staying. Actually, is it really fitting into my value investing ratios, various ratios which I use, it is fitting, and when I have to invest it, or where is the peak, because everybody will be selling on that time. Actually I will be looking for investing into the stocks, and why I should do this right now. So this 5 W's which we have to clearly answer it. Don't look into any kind of a social media accounts or any kind of a Telegram channels, or even into my channel also. If you are planning to invest, actually you can still think all these things actually, because it is your money you are investing. Or if you have any financial advisor, if you say suggesting buy that, buy this and all, you just take like 5 minutes, or even you take 1 hour and answer all these questions. Why I am investing in this particular stocks, when I should invest, is it a dividend paying company, what are the fundamental ratios, are is it rightly good or not, actually what is their company is doing. So you should get answer by yourself. Initially you may take some time to answer all these questions. Sometimes you don't have an answer also, so you can ask questions into my channels, or in the comment box you can ask to me. I can answer those questions answers if I know. So lot of information you should get by yourself, so that you will clearly understand what is the company doing, what is the growth. Actually everything you will get to know a lot of informations. That is the way actually you have to go for look for investing. Okay, so let us go to the last session. If you have any questions, or write in my comment box, I'll quickly come back to you. Okay, and be an expert into value investing. So I have recommended a lot of stocks during last 6 months, or if you look into my past history into my Telegram channel, or many other for value investing, every stock has given more than 50% or 60%. Within 3 or 4 months you will get. Within 3 or 4 months you will be getting like 50% or 60% returns. You will be getting into many stocks, because I use various this value investing ratios which I am picking, and I am giving these recommendations to you. Okay, all the views and expressions which I give on this video is purely my personal. Please do research on your own, or consult your financial advisors, and what are the financial advisors saying, actually you do your own analysis also, so you will get an expert in the value investing. Okay, so subscribe my YouTube channel. I am going to share more upcoming value investing videos to you, so that you too become a champ and a pro in this value investing. Okay, thanks a lot for seeing and watching this video. See you again in the next video. Thank you, bye.